I made $2,029 per month on average during the year of 2019 with this account. It is January 1st, 2020. And this is, of course, the video log that takes 30,000 to a million. It's going to happen. And today's a very exciting day because I'm doing the annual review. I'm going to tell you, I'm going to break this account down. I'm going to show you exactly what happened in the account. Well, exactly within reason, all right? And I will break down the numbers and you'll see what portion of the gains is through what means, etc. And I'm going to explain it step by step, all right? So that's what's going to happen in this episode. So without further ado, let's just show you the account here. It is sitting at 75. I know how to read numbers. $78,451.67 at this very moment. And that is an all-time high, right? That's an all-time high. So that's very good. And now you can see I have it set for the year here, and you can see the yearly gain of $24,353 and some change, and that equates to about 45%, which is of course beating the market, and I'm very excited about beating the market always. So that's super cool. If you're interested as to how the quote-unquote market is doing, market over the year is 31.06%, as illustrated here by the SPY, which is an exchange traded fund that encompasses the 500 largest, most successful US-based companies. You can buy into this index or other indexes which are lower cost, like VOO. Anyways, let's not derail this train here. Let's see what's going on. This is the weekly performance, 1.56% or $1,200. Now, what happened here? Apple went up a little bit. Of course, I want to run you through the account real quick as to what happened to the last trading day, and then we'll get into the numbers. So I'm sitting at Apple went up, $300 for me, but of course, minus 147 because of the call option that I have sold. So I'm sitting about a $155 gain right there. So that's good. Now, EXK was down a little bit, as well as silver. My silver calls over here down $30. Any other notables? I'm a little bit sick, so apologize, or at least I think I'm getting sick, so apologize for that, but it is what it is, right? Okay, so energy fuel is up $72, which is great. Chemical is about flat, which is fine. URG is up $12, which is great. And so everything else is kind of a non-event past that number. I received a few dividends. If you want to know the exact positions of what I have here in my options place at the moment, I have 2 puts sold for ET. That's energy transfer for January 3rd, which expires the end of this week. So that's cool. 2 of these contracts and might not expire. It might trigger if ET is below $13. I think it is below $13 at the moment. So anyway, Chemical expiring on January 10th. It's a $9 put. Just one. Chemical expiring on January 17th, $12 call. Chemical, $8 put expiring on January 17th. Energy Fuels, 4 calls expiring on January 17th. Chemical again on January 17th, 1 call at $11 call. Apple, 1 call expiring on January 17th. So as you see here, January 17th is a very key date for all these option plays. EXK, 2 sells, $2.5 sells expiring on February 21st. And if you're listening to this audio, I guess you're thanking me right now. If you're listening to the video, probably not, but what else? All right, so Energy Fuel, $2.5 calls expiring on April 17th, and then silver options expiring on April 17th as well, $15 SLV calls. All right, so and then there's the rest of the positions. If you want to pause and look through them, check out the symbols. That's great. You can see the number of shares here as well as the symbol. So if you're interested, just pause at any of these moments here, and you can check this out. All right, that's it. In my watch list, I just have a few things that I'm following here. You can check those out as well. I did have plays on C-SPAN, but those expired, and I collected the premium, $50 from that, so nothing big there to report. All right, that's it with the account. This is what I'm holding at the end of the year and going into the next year. So that's it. If you're interested in the details, there are the details. Now let's go into it, right? I'm gonna break the numbers down. First, starting with the total, the how much money I made per month. All right. So what I did here is I made $2,029 per month, counting in everything, right? Appreciation, dividends, and premium. So you're probably looking at this, not me. So I made $2,029 per month on average during the year of 2019 with this account. So there you go. That's probably going to go in the front of the video. Now the next number here represents the amount of appreciation that the account has had with the current positions that haven't been sold or bought. All right, so let me explain to you what that means. If I go into the account here, you'll see all these stocks here, and you'll see this total return, right? That's how much the positions that have appreciated. And then the next number is how much the positions that I hold have depreciated, which is these red numbers over here. Now, if you combine them, you get a value change of $5,171.57. So far so good. Now, that is the value change of the positions that I hold currently. Now, many of these positions have been exited from and entered in. So if we go down further, well, this is incorrect here. Actually, I should amend this. Let me change it on the fly right now. So the total account value change is 24,353, as you saw in the beginning of the video here. And what I'm gonna do here is I'm gonna change from premium and trades. So, all right, boom, done. Now that's more accurate. So that means that the rest of it, if we subtract 5,171 from 24,353, we're gonna get $19,181.49 here, which is gained from dividends, premium from option plays, and trades. So buying and selling stuff. So that's these three methods. That's how I generate $19,000. So which is the bulk of the account. Now, do not erroneously conclude that I would have gotten a lot less money had I not been doing all this active stuff. All right. It is possible if you hold the positions all the way through and not keep trading and collecting premiums and all that stuff, you might get a better return. Now, I just happen to get a better return doing active stuff, but had I held my positions, especially the Apple position, if I had just held it and not played around so much with the options, I could have gotten a better result. And I would have had a better result. I mean, Apple's up almost like 80% or something like that. I don't know. Let's check. Apple is up. Let's see. This year, the 1 year chart looks like this. Hello, 1 year chart. Yeah, 89.61%. I mean, that's ridiculous. Absolutely ridiculous. So, had I held on to my Apple position and not done anything crazy, then I would have gotten much higher appreciation, right? But it's always tricky. You can't predict the future. You can't know what's going to be valued higher in the future to a high extent. So you don't want to take, I don't want to take that much risk. What you do is up to you, right? You're responsible for your own trades and decisions. I'm just sharing what I'm doing here. None of this is financial advice or recommendation, by the way. It's for entertainment and maybe educational purposes. So that's it. And for keeping a record um, for my personal goals. All right. So what does this mean? This means that what I'm doing actually takes less risk, and so that's why I'm doing it. Okay, I'm doing it because Apple could have dropped 50%, in a couple months, and my entire account would have been wiped out, right? Down 50%. But the way I structured things, it doesn't. The way I diversified, the reason I put on some of these options is to prevent those scenarios. You see what I mean? So I don't want to have my account dropping down $30,000-$40,000 in a month because of a heavy Apple position. So I want to be exposed to Apple, but at the same time, I don't want to take the risk, right? I don't want to take the volatility that Apple comes with. So that's the reason why I do these things, and the price I pay is having less gains, and that also counts for some of the other positions that I have, but it doesn't always work out that way. Okay, so let's take another example, right? So you may know that I have made a ton of money on Cameco. So if we go to Cameco here, in this case, I'm a winner, right? So if I just held my money in Cameco for the last year, I would have been down 20%. 20%. So where active trading and option plays hurt me in the case of Apple, it's really helping me in the case of Cameco, right? If I have my entire position, look at this, 1,500 shares. If I had just held on to it, my account would be just horribly down under, right? Especially if I put my entire account into Cameco. So in some cases, it's not good to just put your account into a stock and just have it ride out the entire year. Otherwise, everybody else would be having a 30% plus year, and now I'm out here having a 19.75% down year. Right? That's very bad. So that's just another example. So option plays and dividend plays and stuff like that sometimes is beneficial. Nobody has a crystal ball. This could have been Cameco's year. Uranium could have popped up. Hopefully, maybe next year it does a little bit better. But the thing is, I know this about Cameco because the company travels sideways for the most part. So it's not really a buy and hold kind of a company, right? You want to pick your moments with it. You want to collect premium along the way. It's a mining company that have a lot of cost, and uranium business is a little bit in the doldrums right now. So, there's no one true answer on how to do things, is what I'm trying to get to. All right. And I think that's the important lesson from this year, okay, is that there's not one way to skin a cat. And in case of markets, there's like an infinite amount of ways to skin the cat. And in my personal opinion, it's most important that you find your personal way, right? I always talk about how it's best, and at least from what I think, it's best to have your own personal edge because it's the one thing that nobody else has in the market. It's the way you do things. So you have to find something that works for you and do that. If you want to perfect day trading and you find like some pattern that nobody else has used or whatever, then fine, have fun at it, and then make a bunch of money and hopefully know how to manage it once you have a bunch of money. But make backup plans. Be willing to stay agile out there, and make sure you do things your own way. Just never stop learning, but don't just never copy someone else, is what I'm saying. That's not the way to make a lot of money. If you want to copy these trades at your own risk, then fine, do it. But in my opinion, you'd make more money just doing you. All right, I think I'm going to sign off for now. Happy New Year, everybody. Hopefully 2019 was great for you. It was pretty good for this account. It was very good for anybody who held their money in the markets, in the U.S. markets. And hopefully next year is even better for all of us. I hope you guys are making even more money than I am. And if you are, or even if you're not, let me know how your account did in 2019. All right, I think with that said, peace out.